So today was a phenomenal day within Trader Society and a very strong start into the week. I ended up playing SPY put options twice towards the key resistance levels as mentioned in the watch list, and the unique gap strategies worked once again, and I was able to nearly make a 30% return on each trades 2 for 2 on the SPY. With that being said, I'm going to be recapping the trades and walk you through how we're able to buy put option contracts on the high of these stocks. I'm going to explain to you how we're able to consistently profit within the stock market using these unique gap strategies and by premeditating and planning our trades and setting price alerts. These were purely based off of the strategy and off the watch list that was sent out to members this morning. I'm not only going to walk you through the trade recap and the strategies, I'm going to prepare you to trade the new upcoming best setups at the best prices. So make sure you stay to the end of this video for the trading plan. So in terms of the trades that were made today, first things first, in terms of the morning watch list that I sent out this morning, this was also streamed live. I had clearly stated if SPY gaps up, which it did, so SPY gapped up. So if it does gap up, this is going to be the game plan. I'll be waiting for $446.60 to react as a resistance level. For a crash to $444.52. If it cracks that, I'll be interested in adding to put options for a pullback to 439. So why did I decide to buy put options on the SPY? And I alerted it right here, and this was streamed live as well. Right here, I went with the safe puts. If you were to go with the same day expirations, these could have easily made a quick 70 to 90% plus. But at 9:44 a.m., I alerted the safe puts at $3.29. Strike was 446, basically at the money, in the March 23rd. So let's go to 9:44 a.m. Why did I decide to buy put options right here at 9:44 a.m.? So let's just go back to this real quick. So this is going to be 9:44 a.m. right here on this candle, which was 4 minutes before SPY had its high of day. Why did I decide to buy it right at that specific price? Why was I interested in buying puts and shorting the SPY at $446, as you could see mentioned in the watch list this morning at $446.60? Why these key levels? How am I able to get in at the best prices? How am I able to do this? How is it possible? So this trade has been prepared for weeks. For those of you who've been following this channel, I've been stating several times the best level to buy puts on the SPY is going to be one of its higher gaps to fill above, which was right here. And this was a gap that most traders weren't even aware of, which was the best price in the high of day to buy put options on SPY. Most people aren't aware of this simple gap trading strategy. Most people don't even identify gaps, and they're not even aware of how gap trading and gap close reversal works. As you can see right here, the previous closing price, this blue line, is $446.60. The opening price was at $443.22. So that means the SPY opened up lower than it previously closed, right? So that means the SPY had a gap down. So there's a gap to fill right there at $446.60. Why does this matter? Because once that gap fills, it could have a reversal if resistance forms. And history shows not only can it have a reversal, it is a huge downside potential level. As you can see, SPY had a massive sell-off on this day, crashing to 437. And then a couple days after that, it went all the way to 410. So it's a huge downside resistance level, and it's a potential gap close reversal level where these stocks and where SPY tends to fill the gap. And then it could potentially have a reversal with the confirmation and with the right resistance level, with a big downside potential resistance level. And you also had the perfect case scenario here because this is an overreaction. This went from $413 in the pre-market on March 15th, ramping up in just a few days into the 446 range. So it's an overreaction. It's at a key resistance level. It filled the gap. It reacted as a resistance. In terms of my confirmations to get into the trade, you have this big rip up, another overreaction. And if you look at the chart, you can visually see this is your bearish pin. This is your bearish trend reversal confirmation. The bears are stepping in. It's sitting at the highs. It's failing to break out. It's starting to break down out of the channel. On my squeeze indicator, once this turns dark blue, that's when the trend switches. So you can see right here, when it turns teal blue, that's when the squeeze is initiated. That's when, the stocks go up. You can see right here, it's triggered teal blue. What happens when it's triggered teal blue down here? It rises. What happens when it triggers dark blue? It starts to fall. So using all those confirmations, all those indications that I just gave you, That's how I was able to buy SPY put options 4 minutes after the high of day. And as you can see, as soon as I got in, SPY sold off very, very hard. And yes, I did sell too soon. As you can see right here, I sold too soon. If we go to my alerts, I sold 1/3 at 377 for a 10% win. And then I sold 20% more at 450. These are all timestamped, right? For a 30% win. And then I sold the rest at 440. It was phenomenal. It was like a 25% win. If I were to hold those puts, it could have been like a 50 to 60% win. But let me tell you something about the market that we're in. We're in a market that's not meant for diamond. It's not meant for diamond hands. We're not in a holding market. That's not in the type of market environment we're in. We're in a market where it flip-flops rapidly, very, very quickly. And especially when you're trading options, those fluctuations aren't going to be worth the risk. You can easily get back all your profits. You can easily turn a nice green trade where you're up 10, 20, 30% within minutes into a big red trade if you don't protect your capital and limit your risk. So with that being said, we are in a profit-taking market. That's the type of market environment that we're in now. And those who fail to adapt are not only going to give back all their profits, but they will end up turning what was a small win and what was aimed to be a big win into a big loss. So that's the current market we're in. That's how it is. It's flip-flopping rapidly. If you aim for a big win, it might hit once in a while, but you're going to get back all your profits. You're not going to have any small wins. You're not going to have any base hits, and you will turn green trades into red trades. And those could be big red trades, as that creates a lot of emotions. When someone is up 10, 20, 30%, then all of a sudden they're red and they start getting comfortable with holding it because they already held it so long, playing for that big move. So I just want to bring awareness to that. That's the current market environment we're in. And I really do encourage you to take your profits along the way. If you're going to aim for a big win, leave on some small size and set a max risk. Do not go from green to red on these trades, right? So I just want to bring some awareness to that. And then in terms of my second trade on SPY puts, that was alerted at 12:31 p.m. Why did I decide to buy puts on SPY again at 12:31 p.m.? And by the way, some of the reasons why I exited this trade is because it went red, it had a nice move, and I wanted to start locking in profits and playing it safe. So those were some of the reasons, right? With that being said, why did I decide to get back in right here at 12:31 p.m., which was 1 minute after this big red candle? So I was looking at the SPY, and it was just chopping at the highs. It was just chopping at the highs, forming new lower highs. I was actually very tempted to get in right around here before the big pullback. The reason why I didn't was I wanted to wait for Jerome Powell to start speaking, but it was looking very bearish. It was chopping at lower highs, failing to break out. And the reason why I was tempted to get in before is because it started forming gravestone dojis. If you see these gravestone dojis at key resistance levels, the stock is going to have a trend reversal. And as you can see, that worked out fairly perfectly. So I got in right here, and then I got out very, very quickly. As you can see right here, I alerted at 12:37 p.m., just 5 minutes later, that I sold, right, 20% more. And then I sold the rest at 12:40 p.m., averaging a 25% win, 2 for 2 on the day, making nearly 30% wins on each trades that had huge potential, right? So I just identified, as Paul was speaking, in the chart turned bearish, SPY had a massive move to the downside. The market was responding very, very bearish. It went red again and it formed new lower highs. So that means that the SPY is going to try to crack the new low of day because it formed new lower highs. It's extremely overbought for the micro. It's having a gap close reversal. It's forming new lower highs. It's failing to break out. As soon as it switches red like that and starts forming those new lower highs, turning this previous closing price, this key level, this PCP strategy into a resistance level, I'm going to be interested in buying puts and looking to ride it back down. And yes, I did sell too soon. As you can see, it went much lower. But guess what? When I got out right here on this green candle, and then also right before that, when I was selling towards the bottom right here, it ripped back up to my initial entry. Meaning, in order for me to win more, I would have had to go break even or even red on this little spike right here to aim for the bigger win. So imagine being up 25, 30% in 5-10 minutes. And then you're like, you know what? I'm going to aim for the big win. I'm going to hold this. When it goes back to your initial entry and then you go red, you're going to feel like shit. And you could end up turning a big, what was a big, nice win very quickly into a big loss, trying to diamond hand it. It's not going to work all the time where you could just hold through that. And why would you want to hold through that pain of being up 30% and then just giving it all back for a bigger move that isn't guaranteed? And what can potentially happen is instead of that bigger move, not only do you get back all the profit, but it goes against you, right? So I would rather take my profits and get out here versus aiming for a bigger move. Now, if you have strong conviction and you think that bigger move is going to happen, take off like 60, 70%, take off like 70% of your size here, and then just leave 20, 30%, whatever you want to do, leave like 20, 30% on to ride for the rest. There is a time and place to aim for the bigger move, but it doesn't make sense to really leave on more than like 30%. It really doesn't, especially with these option contracts. It's really just best to, not go too heavy on size, but just put a little bit more size in the trade, choose a safer contract, right? That you can actually hold for a little bit. And where theta decay doesn't affect you a lot, like I'm going with the safe contracts, and then just lock in your gains and get out within a couple minutes, right? That's how you really want to do this. These big wins are extremely tough trades. You do not want to go that route. So that's kind of the recap on the SPY trades. Those are my 2 trades for the day. I want to give some big shout outs to some students within Trader Society. This guy has been absolutely crushing it. He's up over $22,000 just trading SPY put options. That's all he's trading. He said right here, since he started within Trader Society, he's never traded SPY before. And all of his gains were using $2,000 to $4,000 in capital. And since he joined, I believe he joined about 3-4 weeks ago, he was able to make over $22,000 within profit, getting in, getting out on the SPY. And it is possible. If you're using a cash account on Webull and you're getting in, you're getting out, you're using the strategies, you're not aiming for the big wins, you're locking in the profits, it is possible, guys. You make that switch where you stop aiming for big wins, you make that switch where you use a cash account, you are going to start to see a big difference within your trading. If your trades are premeditated, you're setting price alerts, all your trades are coming from the plan, the price alerts stated in your watch list. Once that price alert triggers, you're waiting for the confirmation. As soon as I got my confirmation on the SPY, I had full confidence to pull the trigger, right? Literally 4 minutes after the highs, had that full confidence to do so. So that was the recap on the SPY. Now, for those of you who stayed to the end of this video, this is where you really get rewarded, because now we're going to start discussing what are going to be the new plans. What are going to be the new plans in terms of the SPY and the watch list? The updated watch list with the updated price action analysis will be sent out tomorrow morning as well within Trader Society. So in terms of the updated plans, guys, we are currently due for a micro pullback. Right now, the SPY is just way too high for the market. I do think we're due for a micro pullback. With that being said, we are also still due for another macro move up to the upside, as I do believe as time passes, we could see a gap fill to 464 right here. It's the highest gap to fill on SPY at 464.72, the absolute best price you can buy put options on SPY. I do believe that's going to fill eventually sometime this year. So we are due for another macro move. But in terms of the micro and how things are looking for the short term right now, you can just visually see you got the key resistance, you got the big downside potential for the micro. You also have a gap to fill at $417. And you know how this market is. It's very flip-floppy with these big moves, these big overreactions. So we're due for a micro pullback. You could potentially see SPY within time fill this gap at 417, which will be the best price to buy call options. And then you could see it potentially explode back up to start to fill that gap at 464. These are all possibilities. But with that being said, we are due for a micro pullback. So in terms of SPY, how has it responded? How has it been responding since the gap fill? There's a gap to fill at 446.60. Technically, the gap hasn't filled. It missed it by 14 cents. So I did play it as a partial gap close reversal. It did make sense to do so because it was so close to filling and all of the bearish confirmations triggered. And it was just so, overbought for the micro. So it made sense in that case scenario. Typically I wait for the gap to fill, but this was just such a good key level and great confirmation where I couldn't resist and it was worth the risk. It made sense, right? But with that being said, as of now, it's responding very negatively towards that gap fill level. It's forming, it's topping out nearly at the exact level. It's forming lower highs. It's reaching for lower lows. It did push back and close strong. As you can see, it's starting to fade during extended hours. What we're currently looking at in the new price levels, I want you to keep these two numbers in mind on the SPY. The first one is going to be $444.39. If the SPY gaps up tomorrow, the key level and the best level to buy puts is going to be 446.60 for the gap close reversal. If the SPY gaps down, wait for it to go back up. As it's going back up, the new best price to buy put options will be $444.39. So that's the game plan. If it gaps up, I explain to you what I'm looking for. If it gaps down, I explain to you what I'm looking for. Very simple stuff. It has to react as a strong resistance level. If it does, I'm going to be looking to buy put options. And as long as it reacts to the resistance, we're going to see another test of 442.80. If 442.80 cracks, the next target is $440.70. If that cracks, then the next pullback is going to be towards like 438. So that's what we're looking at. Once SPY can really crack this 440.70 and turn that into resistance, we're going to be looking at a nice pullback. So as of now, it's been forming new lower highs. It's down during extended hours, and it's not looking that bullish. We're due for that micro pullback. So that's the game plan. Keeping it super simple on the SPY. Rinse and repeat the same plan. I explained to you the plan with the gap up and also the plan if it gaps down. So now we know what to do in terms of tomorrow and the key reactions and the key price levels and the best confirmations to be looking for. So that's the game plan on the SPY, keeping it very, very simple to rinse puts again in and out. CLOV did have the first red day. If we can go red tomorrow, I'll start to show some interest on put options. As you can see, when this stock has a massive ramp up on the first red day, it tends to sell off the next day and close week at the lows. It tends to sell off the next day and close week at the lows. Tends to sell off the next day, close week at the lows. Tends to sell off the next day, close week at the lows. We're due for a pullback on CLOV. There's a gap to fill at $2.88. That's where this could be heading within some time, potentially by the end of this week. So I'm going to be keeping an eye on some CLOV puts. What I'm going to be looking for into tomorrow, it closed at 343. So if 343 can break down and react as a resistance level, I'll be interested in some puts for CLOV. As for DIDI, this is getting very interesting. I don't think it's going to be an easy one to trade, but I do believe the end is near for this stock. I think we got some serious downside potential. So the plan on this is going to be very simple. Buy put options on DIDI once it cracks $4. Go with the $4 strike, expiration March 25th, if you're trying to play it safer, April 1st, $4 at the money strike. Once it cracks 4, those puts should print. Why do I feel this way? The stock is extremely overbought. It's having an overreaction. It's due for some pullback. It's due for some correction. As you can see, it is the gap close reversal. There was a gap to fill right here at 446. It failed to break out at 446. It's turned into resistance. $4 is a nice keyhole round number. Looking at the chart, just study how it reacts for a nice day trade. Big move up. Study this candle. Same candle right here. Next day gaps down, closes week at the lows. Not the first time it did it. You can just see whenever it has this big move up and it forms this wick, this green wick right here. Here's the big move up. You see the green wick. Next day is red. Further continuation into the red. This big green move up. First red day, further continuation. Big green move up, first red day, further continuation. Further continuation of red, right? Nice green move up right here, same candle, further continuation of red. So the deal with this one is it's got some downside coming. It really does. It's due for some red. The plan is to buy puts on the first red day. Once this can take out $4.10, I'll be extremely interested in put options for DIDI. I don't think that's going to be an easy trade. My experience with Chinese stocks, they're extremely tough to trade and they have very weird price action. And this stock literally fits the criteria for that. But that is something I'm interested in as well. My full confidence play and size is going to be on the SPY. I don't think CLV is going to be a walk in the park either. But that's going to be the game plan. So those are the top 3 that I'm watching. And in terms of the last one, and actually one of the best ones that I'm seeing, is a Tesla put option. Man, for those of you guys who stay to the end of this video, you really do get rewarded with the information that I'm giving out, because I'm telling you, I'm not seeing any other better setups than these. These are like A1 full confidence phenomenal setups. What am I looking at on Tesla? What am I thinking about this one? Tesla had a gap to fill right here at 923.39. As of now, it filled the gap. It's reacting as a resistance level. It's trying to have a gap close reversal. Another thing I'm looking at is this wick right here. You have a wick that's starting to come in. It's not a bearish wick, but it's not that bullish either. It's topping out towards key resistance, having a gap close reversal right here. Big downside potential, overreaction, right? Same price action as SPY. And I'm looking at this situation right here. Very similar candle. It's not red like, it's not as bearish as it was today, but very similar candle. Very similar resistance level, very similar price action, and you could see what happened the next day, and you could see what happened within a couple of days from that. So Tesla is due for a pullback. The plan is buy put options on the first red day. Very, very simple plan. It is currently down in extended hours. So the stocks that gap down tomorrow, the best thing you could truly do is to buy put options when they spike back to the previous closing price. So on Tesla, that's 921.16. That's the best way to play it. If it's not too far off from the previous closing price and it's looking bearish, you can take a starting position. But the best thing to do, wait for them to go back to the previous closing price, wait for the reversal. Tesla falls off a cliff. Once it cracks 905, it's game over. It's going to get a hard hit. In terms of how hard of a hit, we're looking at a quick hit to $870 on Tesla once it can crack 905 and react as a resistance level. So yeah, these are my thoughts. This is my price action analysis. I'm telling you, these are A1 setups. Nvidia is another one. You want to do something as well. Nvidia, when Nvidia goes under 265, these levels I'm giving out, this is money printing, man. You play puts at these levels when it reacts bearish, use a tight stop. It's like the risk to return ratio. It's not going to get better than this. This is money printing right here. 265. Nvidia under 265 on the first red day, great key breakdown level. And like I said, if they gap down, the best level you can go at is the previous closing price of resistance. You can also play the key breakdown levels. Key breakdown level for Nvidia is 265. So that's the price action analysis. That's going to be it. Very, very simple game plan. I'm going to go more in depth with the written watch list, explain it more in an in-depth version and the written version. But yeah, if you do want to be a part of Trader Society, it's going to be the first link down below in the description. Once you sign up, you will get instant access. You will get lifetime access to the live trading streams every single day at market open, where you get to watch me trade live. You also get access to the chat room with me and all the members within the chat room. We had one guy make over 6 figures today on SPY put options. It was truly incredible. And that's not the first time he did that within Trader Society. We got a lot of people killing it in there, very consistent. Keeping the group small, very tight group, laser focused on the gap trading strategies, trading the best steps at the best prices. I mean, who's doing it? Who's premeditated trading like this? Who's trading at these key levels? Who's putting this information out there? Nobody's doing it because it's all self-taught. This isn't things you learn within books. This is things you learn by reading the chart and by gaining experience by being self-taught, by truly trading the chart and the price action. So yeah. If you do want to learn the gap trading system as well, the video lesson library is going to teach you the gap trading system, all the price action analysis trading strategies. It's going to teach you the mindset of trading, the psychology of trading, how to be disciplined, right? How to trade the best steps at the best prices, how to create the plans, all of that stuff. Also risk management and position sizing in the calculators for that. And you do also get access to one-on-one direct messaging with the members and I within the chat room. You can also ask me questions live on the spot during the market open streams. So there's a lot to it. If you want to learn more about it, all of the information is explained on the first link down below in the description. Once you are ready to trade with us live at market open, you can get started as soon as possible. It's a one-time fee and it's lifetime access. For those of you within Trader Society, the watch list is going to be sent out tomorrow at market open, and we're going to have another killer live trading stream. I'm telling you guys, these setups right now, these are like A1 phenomenal setups. These are the type of setups where when you join Trader Society, not only do you make back the cost of the program on like your first week, but you make back potentially a lot more. Like these are the A1 full confidence setups. When are we going to see, these situations occur again? It takes time. It takes time for them to hit their key levels. And I'm telling you, the time is now. So if you are interested in trading the best setups at the best prices, this would truly be the best time to get in. So I'm going to leave it off with that. It's going to be the first link down below in the description. I will see you guys tomorrow live at market open.